Did you notice what just happened? While most XRP holders were busy watching the price chart, the biggest shift in XRP's future may have happened right in front of them, and almost nobody is talking about it. The same pattern that trapped investors before is starting to appear again. The headlines look bullish, social media is celebrating, and confidence is rising. But if history teaches us anything, it's that the market loves to punish the majority right before the biggest move. The question is simple: are XRP holders preparing for what's coming next, or are they walking straight into the same trap all over again? Welcome back to XRP Matrix, where we connect the dots behind the headlines and uncover what the market isn't telling you. Most XRP holders believe the hardest part of the journey is already behind them. After years of regulatory battles, legal uncertainty, exchange delistings, and endless speculation, many investors feel like XRP has finally reached the point where the path ahead looks clear. The lawsuit drama appears to be fading into the background. Institutions are openly discussing digital assets, and lawmakers are debating legislation that could finally provide regulatory clarity. On the surface, everything looks different from a few years ago. But that is exactly why this moment deserves more attention. Markets rarely reward the majority when everyone starts feeling comfortable. In fact, some of the biggest wealth transfers in financial history happened when investors became convinced that the risk was gone. That is the environment we may be entering right now. Think back to every major market cycle. Whether it was stocks, real estate, Bitcoin, or even gold, there is always a phase where investors become emotionally convinced that the future is obvious. During those periods, people stop questioning assumptions. They stop looking for risks. They stop preparing for alternative outcomes. Instead, they focus only on information that confirms what they already believe. XRP investors are not immune to this behavior. In fact, after spending years defending their conviction against critics, many holders are now more emotionally attached to their positions than ever before. That emotional attachment can become dangerous because it makes it harder to see developments objectively. When everyone expects a straight line upward, even a temporary delay can feel like a disaster. One of the biggest traps investors fall into is confusing a strong long-term thesis with a guaranteed short-term outcome. These are not the same thing. XRP can have growing utility, increasing institutional interest, and expanding adoption while still experiencing periods of volatility, delays, and unexpected setbacks. The market does not move in a straight line simply because the fundamentals improve. History repeatedly shows that strong assets often experience their most frustrating periods right before major breakthroughs occur. Investors who understand this stay focused. Investors who do not understand it often end up selling at exactly the wrong time. That pattern has repeated itself countless times across multiple asset classes, and there is no reason to assume XRP will somehow be different. What makes the current environment particularly interesting is the growing conversation around regulatory clarity in the United States. For years, uncertainty acted like a wall preventing many institutions from fully engaging with XRP. Now that lawmakers are actively debating frameworks for digital assets, many investors believe that wall is finally coming down. The excitement is understandable. Regulatory clarity could open doors that have remained closed for years. But this is where the trap begins. Many people hear the words regulatory clarity and immediately assume instant adoption. In reality, large institutions move much slower than retail investors expect. Banks, asset managers, and enterprise clients operate through compliance reviews, risk assessments, pilot programs, and internal approvals. Even when the legal path becomes clearer, adoption still takes time. Another factor that deserves attention is expectations. Markets are driven not only by reality, but also by expectations about the future. If investors already expect positive developments, some of that optimism may already be reflected in the price. This is why markets sometimes react negatively to good news. The news itself is positive, but the expectations surrounding it were even bigger. XRP holders have experienced this before. Major announcements arrived, excitement surged, social media exploded with predictions, and then the price reaction failed to match expectations. That disconnect creates frustration. It causes some investors to question their conviction even though the underlying story may still be moving in the right direction. Understanding this psychological dynamic is essential for navigating what comes next. Institutional involvement is another area where expectations and reality often collide. Many people imagine institutions arriving all at once and creating immediate demand. In practice, institutional adoption tends to happen gradually. It starts with testing, infrastructure development, strategic partnerships, and limited deployments. The public often sees only the final result while missing years of preparation happening behind the scenes. Ripple has spent years building relationships, payment networks, and enterprise solutions. Those efforts are important, but investors should understand that large-scale adoption is usually a process rather than a single event. The biggest mistake is assuming that because institutions are interested today, massive implementation must happen tomorrow. There is also a growing difference between what social media rewards and what successful investing requires. Social media rewards certainty. The most popular posts are often the most confident. People love predictions, targets, and bold statements. But real investing requires uncertainty management. It requires understanding that multiple outcomes are possible. When investors surround themselves only with voices that reinforce one narrative, they become vulnerable to surprises. XRP communities are incredibly passionate, but passion alone does not eliminate risk. The smartest investors continuously challenge their own assumptions. They actively search for information that could prove them wrong, because that process helps them make better decisions. One of the reasons this trap keeps repeating is because human psychology never changes. Technology evolves, regulations change, markets mature, but fear and greed remain constant. During uncertain periods, people become overly pessimistic. During optimistic periods, people become overly confident. The cycle repeats over and over again. Right now, many XRP holders are shifting from frustration toward confidence. Confidence is not inherently bad. In fact, it can be justified when supported by evidence. The danger appears when confidence turns into complacency. Complacency causes investors to stop evaluating risks, stop managing expectations, and stop preparing for volatility. That is often when markets deliver their biggest surprises. Another important point is that timing remains one of the hardest aspects of investing. Being right about the destination does not guarantee being right about the timeline. Countless investors correctly identified major trends years before they became obvious to everyone else. The challenge was surviving the waiting period. XRP holders know this better than most. Many have endured years of uncertainty while maintaining their conviction. Ironically, the final stages of a long-term thesis can sometimes be the hardest because investors become exhausted just before the outcome they were waiting for finally arrives. The market has a way of testing conviction when people least expect it. What should investors focus on instead of getting caught in the trap? The answer is surprisingly simple. Focus on facts instead of emotions. Focus on adoption instead of rumors. Focus on infrastructure instead of hype. Focus on long-term developments instead of daily price fluctuations. The strongest investment decisions are usually made when emotions are under control. Every headline, every social media post, and every market reaction should be evaluated through the lens of evidence rather than excitement. That approach does not guarantee success, but it dramatically improves the odds of making rational decisions when others are acting emotionally. As we look ahead, there are legitimate reasons for optimism surrounding XRP. Regulatory discussions are advancing. Institutional conversations are expanding. Blockchain infrastructure continues to develop. Ripple remains active in building partnerships and exploring new opportunities. These are meaningful developments that deserve attention. At the same time, investors should resist the temptation to assume that progress automatically translates into immediate results. Markets rarely move according to the timeline people expect. The path forward may include volatility, delays, and periods of uncertainty, even if the broader trend remains positive. Understanding that reality helps investors avoid emotional decisions during difficult moments. The biggest takeaway from everything we've discussed today is that the trap is not necessarily a regulatory obstacle, a court decision, or a market correction. The real trap is psychological. It is the belief that because the story looks stronger than ever, the journey must become easier. History suggests the opposite. Major opportunities often come wrapped in uncertainty. They often test patience right before rewarding it. Investors who understand this dynamic position themselves differently from those who get swept away by emotions. They stay focused on the bigger picture while remaining realistic about the road ahead. So as the next wave of XRP news unfolds, ask yourself one question. Are you reacting to headlines, or are you analyzing the underlying trends that actually matter? Because the investors who succeed in the long run are rarely the loudest voices in the room. They are usually the ones quietly recognizing patterns before everyone else does. And if history is about to repeat itself once again, the biggest mistake XRP holders can make is assuming that this time the market will be easy. The opportunity may be real, the momentum may be growing, and the future may be brighter than ever. But that does not mean the market won't try one more time to shake people out before the next chapter begins.